Good morning, guys. Happy Monday, everybody. Welcome to this new trading week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, Bitcoin on the 4-hour. We are attempting to take another leg up. So one leg, two leg, a third leg up. We're trying to get obviously towards this trying to tag this resistance area here up at like around 17,600. Obviously that is a target. It will be pretty important level of resistance. If we get through there, then yeah, I mean, and then we open up basically what is the top side of this range we're probably in, this 16,500 to 18,500. We've got a good chance of tagging up this 18,500 where yeah, that is sort of the make or break line for me. I think if we get through there and then we sort of get back above all these lows and then particularly get above this resistance area here, then yeah, I mean, we could be seeing over that time over time that move to 30,000. But obviously this is still early days, and again I will just say any time that we spend above this support area is obviously good. There's a lot of FUD, there's a lot of bearishness, and obviously rightly so. There's a lot of bearishness in this market at the moment. We're clearly in a heavy downtrend. Stock markets, all macro markets are in a larger time frame downtrend. There's a lot of bearishness around, so obviously trying to pick bottoms is difficult. Most of the times you'll be wrong. Only one time will you ever be right if you pick the right one. But yeah, difficult markets, but it is looking a bit more promising than it has been. So yeah, that is good. If we go and look at stock market, it basically had a sell-off on jobs number, but managed to bounce straight back up, which is clearly a very good sign. It clearly shows that this pull down, it seems like people were looking at it to try and cover shorts, in my opinion. But yeah, I mean, maybe they were just looking at it as an opportunity to buy. But maybe that's what you see in when you have uptrends. It's like any downtrends will be pretty sharp, and then they're used as an opportunity to basically get out of shorts. It's the opposite in a downtrend. Obviously, any moves to the upside are usually then wick straight back down, as you see, and they are used as an opportunity to get out of longs. But yeah, could we be starting an uptrend here? I mean, we're certainly in an uptrend for sure. It's just a case of this downward sloping trend line, which is the larger time frame trend line, bear trend line, obviously. Well, yeah, invalidation, if you know what I mean. It's obviously this is clearly an uptrend. This is clearly a downtrend on a higher time frame. So if this uptrend manages to break through this higher time frame downtrend, then yeah, I mean, literally, the target is new all-time highs, and that would be pretty impressive, wouldn't it? Failing all of that, our target is down here, and I mean, there are so many macro guys that I've seen, and I mean, it's credible stats. It is correct stats that obviously with earning per share reductions in 2023, and then also a slight multiple reductions in 2023. The actual fair value for the S&P is down here. Which is a 618 incidentally, is down here at 2,900, and that is if we don't get an even severe earnings recession, and even severe reduction in the multiples. So yeah, that would be the price of the S&P in those given situations. We're not up here. Would this level be of relevance at some point into next year? It certainly would at basically the start of next year. So well, actually the end of this year. I'm not saying we are going to come back down there straight away. Then I guess if we do come down here, we'll potentially overshoot. So maybe we come down to 2,800, and maybe we do it around February, March, if we are to do that, if that is to be the trajectory. What I will also say is that we should expect flows to be relatively good into risk assets coming into basically the start of next year, and then it will be crunch time. It will be decision time come like the end of January. Does selling start to ensue? There will be, obviously we've had a bad year. There will be tax loss selling into the end of this year, and then that tax loss selling will then have to wait 31 days to then buy back in. So there will be buying pressure for people that have taken basically tactical closing of losing positions just for the tax loss harvesting. So they a lot of those people then will rebuy. So yeah, we have got upside drivers up to, like I said, up to potential this time. So maybe we do break above here, we continue upwards. Maybe we do just come down. We actually then trade sideways between 4,000 and say 3,700, and then we take a leg down. But yeah, that is the macro. Obviously, we break above here, and especially if we take out 4,300, then I mean, you have to, in that scenario, be looking for high highs. This is a market, as you guys all know, of new things happening. This retracement here, above 50% of the sell-off, has never resulted in then a lower low being printed afterwards, which I was saying at the time. And lo and behold, the first iteration of that lower low. So that is something that will be important to realize going forward, is that things are different this time. This is different. This new low after this magnitude of a rally from the low is different this time. Things are different this time. This market is different. We are probably in the late stages of yeah, I mean, probably in the late stages of fiat currency has been and this financial system as it currently stands. The debt is getting too high. Corruption is getting too high. Just the whole Ponzi-nomics reaching seem to be reaching a breaking point. So yeah. Just got to be aware things potentially can be different going forwards, and that will come blindside a lot of people. And that is not to say we then just come low. We could have the Ludwig von Mises crack up boom like Venezuela or Zimbabwe, stock market just going up and up and up, and obviously the actual currency collapsing. This is not a currency collapse as of yet. However, it's certainly a change in the trend. And then what happens, I mean, if we look at this to the upside, what happens in a change in the trend? You change the trend, you move up, and then you accelerate to the upside. So if this just starts to trend down and then accelerate to the downside, that would be a collapse in the currency. And at that point, yeah, I mean, taking out these lows, I mean, in fact, to be honest, it's kind of this range, isn't it? Taking out 78 to 70, we'll probably draw this in the range. Taking that out, and then that is it. And then we yeah, say see you later. We are looking at some sort of a new system. Who knows what that will be and how it will look, and what it means. We can't know these things. However, this will be it basically. This level, if we take it out, this is the support level for the current fiat dollar system. So this is obviously a relative currencies against other currencies. Don't forget that also. But clearly, in a collapsing currency, the dollar will be the last one standing. So then, yeah, I mean, even that theory in itself, we could have the collapse and we'll not even come down here because the dollar would still be more wanted than everything else. However, if the dollar is the most owned and the one that has been propped up the most by the system, maybe a collapse of the system will collapse the dollar first, whilst other countries look more to other things, and then the dollar gets wholesale abandoned. It's just difficult. It could go up, it could go down, basically. Yeah, so that is it. Oil holding there or thereabouts. We'll just get back to our 4 hour time frame. 4 hour holding there. Potentially these things going off in China could result in a reopening earlier maybe than what people were expecting. Ethereum Satoshi parent did have a pullback. There was a big seller at the weekend. Smashed us down. Nice to see that recovering. Yeah, nice higher low as well. Can we take out these highs, break through this resistance, and then basically go to the moon? Don't forget, if crypto is going to recover, then Ethereum basically what am I trying to say, activity on the Ethereum network will increase, the burn will increase, the demand for the asset will increase, and we'd expect it to severely outperform Bitcoin, in my opinion, in my humble biased opinion, in the next bull run, whilst obviously the activity on chain has to be factored in, which just ain't relevant for Bitcoin, is it? The Ethereum Satoshi USD pairing as well, looking to make a run for this. This is one of the most important resistance areas, I think, for Ethereum at the moment, and then ultimately getting above, well, just call it 1400, clear these wicks, then yeah, we got a good shot of of taking out this high and resuming a new bull market. So yeah, lots of positivity. The 10-year bond also in inverted commas collapsing. if it wants to load up. A 3.5 yield, just need to get it down to a 2.5 yield now, and then we'll be laughing. Oh, here we go. Yeah, it is at an important level of support here. You can see this recent high. You would expect a bounce here. If we don't get a bounce here, that is incredibly bearish. And yeah, I mean, we are looking at yeah, I mean, we're looking at basically around 3%. We'll draw a couple of horizontals in here. This is where we would be aiming for the next potential bounce, and then maybe it puts in a higher low relative to this low. Obviously you can see we are clearly in an uptrend, and then yeah, maybe this is an area for higher low to continue to the upside. Failing that, then yeah, this is in play, and obviously lower, probably get a bounce there, probably create a head and shoulders, probably go back to 0% interest rates in, let's have a look where it would be about in yeah, somewhere in 2023, which that could potentially tie into the stock market going down to like 28, the S&P going down to 2900. Would probably get some big cuts in rates, and we probably would be heading towards zero anyway. So yeah, maybe that's what's to happen. Not the bullish thing though. Obviously, S&P down to 2800 is not bullish. Clearly, it goes without saying. Gold looking decent here. However, this is its main area. Got to get above here. Gets above here, then yes, I would be get above 1880, close there, hold above there for like say a week, because we are looking at a larger time frame. Then I would actually expect us to go to new highs and beyond. Silver looking decent here. Yeah, looking decent here. It is back above what would be its relative similar range here. Silver obviously has been underperforming. If we look at the gold silver ratio, this is what am I trying to just zoom out of this a little bit. Yeah, I mean, gold has been going up against silver. It's starting to reverse a bit now. This is an important level. So does it bounce here? Does it go back up? Does gold start to outperform silver? If it's gonna do, this is the level. If it ain't, its next levels are probably around 70. So that would be a decent move of silver against gold. So yeah. Stochastics, how are they looking? How's stochastics looking? 4 hours actually still giving us some upside. 12 hour still upside as well here. Daily looking to turn down from a particularly high level here. Not been this high since the end of March, so quite a while. So yeah, daily getting pretty elevated. Then however, these medium time frames starting to take over, looking pretty good. 2-day moving up here, 3-day moving up here, 5-day turning up from down here. Weekly still down though. Bi-weekly up, and monthly did actually extend more to the downside. So if we do get the move up, hopefully next month we can get this turn up. How have we put in the low? I mean, we've moved so far down from 69,000. We are still so close to 15,000. It's $2,000. It's nothing. We could easily put in new lows, trade lower, wick lower, whatever. However, it is looking like the lows around here. So either the current lows are 15,000, maybe 14, maybe even 13, but anywhere in the zone on the obviously the much larger time frame is basically there or thereabouts. So I think a lot of people will be looking at that. A lot of people will be dollar cost averaging large positions around here to then once we start to obviously have the interest rate cycle just help us out, help markets, and then stock markets potentially recover, risk assets recover, then start to DSC out those positions. Doesn't seem like the worst trade in the world, does it? So that is it, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.